This video is the only thing you need to understand your tax obligations as a New Zealander on a visa for in Australia. No jargon, no confusion, just the facts you need. Let's break it down. Are you considered an Australian tax resident? First things first, does Australia consider you a tax resident? As a Visa 404 holder, you're typically classified as a temporary tax resident for tax, which comes with some big tax advantages. You're only taxed on income earned in Australia and not your foreign income, except for salary and wages. You stay a temporary tax resident unless you get a permanent visa or become an Australian citizen. How does temporary tax residency affect your income tax? So, what does this mean for your actual tax bill? Let's break it down. If you earn a salary in Australia, it's taxed just like any other resident. If you own rental property in New Zealand, the income from it won't be taxed in Australia. If you sell your home in New Zealand, you won't pay capital gains tax in Australia. If you receive dividends from a New Zealand company, they may be tax-free in Australia, especially if the profits were made while you were still living in New Zealand. Does regular residency rules affect these treatments? Under the ordinary tax residency rules, you could still be considered an Australian tax resident if you live in Australia for at least 183 days in a tax year, or you move here with the intention of staying long-term, like buying a home, enrolling your kids in school, or making long-term investments. If either of these applies to you, you can be an Australian tax resident. However, as long as you are under Visa 4, the concessions under temporary tax resident rules are available regardless. However, understanding the ordinary tax residency rules is important for areas of income tax not covered by the temporary residency rules. For example, your ability to apply A. The main residence capital gains tax exemption, and B. To claim an exemption from foreign resident capital gains withholding tax. Thinking of buying a home in Australia? If you're planning to buy a home in Australia, here's some good news. No foreign buyer tax. Unlike many other visa holders, if you're on a Visa 4, you won't pay extra taxes when purchasing property. Land tax exemptions apply if the home is your main residence, and you live there for at least 6 months each year. If you sell your Australian home before moving back to New Zealand, you may qualify for the main residence capital gains tax exemption, which could save you thousands. Bringing money from New Zealand to Australia. Thinking about transferring large sums of money over. Here's what you need to know. Any transfer over AUD $10,000 is automatically reported to Austrax, Australia's financial intelligence agency. The ATO may ask about the source of your funds, so keep clear records, especially if the money comes from non-taxable sources like the sale of your New Zealand home or rental income. Working or starting a business in Australia. If you or your spouse get a job in Australia, your income is fully taxable here. Own a business in New Zealand and start managing it from Australia. This could trigger Australian tax obligations, even if the business is still based in New Zealand. If you're running a business across both countries, getting professional tax advice is a smart move to avoid unexpected tax bills. Final thoughts. So there you have it, your tax obligations as a Visa 4 holder in Australia, simplified. Planning your move? Already here and need specific advice? Talk to a tax professional to make sure you're making the most of your residency status. And if you found this helpful, like, subscribe, and drop your questions in the comments. See you in the next video.